What if I told you the reason you feel like you're constantly overpaying in taxes isn't because you're doing something wrong, it's because you're playing in the wrong system? Most people are told, work hard, get a good job, and everything will fall into place. But no one tells you this. W-2 employees are operating in the most limited tax lane available. And until you understand that, you'll always feel like you're behind. This video is not about tax loopholes. It's not about writing off your life. And it's definitely not about trying to trick the IRS. This is about understanding how the system actually works, and how the people building real wealth are playing a completely different game. Welcome to Corporate Citizens LLC. We help everyday Americans make the transition from employee to employer and onward to investor. Because once you understand how to move from earning income to owning income, everything changes. Here's the honest truth. W-2 employees usually pay more taxes because they operate in a narrower tax lane. Employees live in one lane: work, paycheck, taxes withheld, limited options. Business owners live in a different lane: create, own, deduct, reinvest, scale, structure, and that difference is where wealth is built. Let's clear something up immediately. Forming an LLC does not make your life deductible. A hobby with a logo is still a hobby. The IRS is very clear. Expenses must be ordinary and necessary and tied to a real business, with a real profit motive. That means real records, real revenue intent, real operations, real separation from personal life. Not TikTok tax advice. The wealthy don't win by pretending their hobbies are businesses. They win by building real businesses around things they already understand: energy, interest, skill, market demand. Then they monetize it. Then they structure it. Then the tax code works the way it was designed to. Example: a client builds a parenting product review business. They buy products, review them, post content, earn affiliate income. Now some product costs may qualify, but only the portion used for the business, not everything their child uses. That distinction matters. Another example: a cooking content business. Yes, ingredients used for content creation may potentially qualify as business expenses. But no, your weekly grocery bill is not automatically deductible. The rule is simple. Business use gets deducted. Personal use does not. Let's take a bigger example. Someone loves fishing and buys a boat. If it's just personal use, no deduction. But if they build a real charter business, marketing, bookings, licenses, revenue, then a portion of that asset may be tied to business use. But again, structure matters, intent matters, documentation matters. This applies everywhere: photographer, real media business, fitness enthusiast, coaching business, hobbyist, e-commerce brand. The pattern is always the same. Ownership unlocks opportunity, not interest alone. Here's what most people get wrong. They chase tax strategy first. But the real sequence is skill, income, ownership, structure, optimization. You don't optimize nothing. You build something, then optimize it. Even at higher levels, tools like borrowing and leverage exist. But understand this: leverage is a tool, not a cheat code. Used correctly, it creates flexibility. Used incorrectly, it forces bad decisions. The real difference between people who build wealth and people who lose it? Structure. Clean books, real records, entity discipline, professional credibility. This is not admin work. This is wealth preservation. Let's make this simple. W-2 employees pay more taxes because they operate in a narrower lane. Business owners create opportunities, structure income, build equity, and plan long-term. And remember this: the wealthy don't win by pretending their hobbies are businesses. They win by building real businesses, real systems, real records, real structure, and letting the tax code work the way it was written. If you're ready to make the transition from employee to employer, visit becomeacorporatecitizen.com or call 516-476-8204. This content is for educational purposes only and does not constitute legal, tax, or financial advice. Every situation is unique. Please consult a professional before making decisions.